So crypto realized vol hung around about 35 to 40 across the two assets as these large swings around Grayscale and then moving back down provided some two-way vol. The last few days has been much more in line with what was happening before the noise. And so, whilst realized numbers still contain the big swings, once that drops out, we could see realized drop straight back towards 20 again, just like we were before. So be careful of that. Don't get too excited about realized vol numbers where they are, because they do contain those big swings, but that did not last for very long. Short dated implieds were slightly firmer on the week, but remained below realized vol. So we've got quite a bit of negative vol carry showing up here, about 10 vol points in Bitcoin and about 2.5 in Ethereum. Again, it's because implied vol is forward looking, realized vol is backward looking. So the implied vol and what people are doing in options is anticipating that realized was a flash in the pan, and we are going back to a 20 handle on realized, and that's why the vol is trading the way it is. Okay. And then we suspect any material pickup in vol this week would only come if we get a downside break of those weekly support levels, right? So you might maybe get some random headline again on the ETFs, but I don't know. I mean, that's hard to predict. But if it's not headline driven and we just kind of do start to break down below those supports, that in itself will trigger some volatility, I suspect. Okay, term structure. So looking at the term structure, BTC barely moving, about a vol up in the front, vol up in the back, and then drifting a bit in the middle. So that was kind of what we had going on. Medium term vol October to December was down about a vol and a half. Looking at Ethereum, bit more of a change there. Front end actually did catch some bid, order of magnitude 2 or 3 vols here. But similar story in the real back end is firm, but Dec and March under a little bit of pressure there, but quite small moves in the surface relative to what we have been seeing. You can see that front end Ethereum popping a little bit there. People, thinking on the downside break, Ethereum actually can move. So that vol was looking too cheap where it was sub 30. So that vol's back to about 32 in the front end, basically. Okay, looking at relative value. So because of that bid for Ethereum front end, that has taken the vol spread back into positive in the weeklies. So you can see the weekly vol spread is back at positive 2. Monthly, still negative. Back end, very negative. So you've got an inverted term structure there on the spread. Even though 10-day realized very much in favor of Bitcoin, which is interesting. So it's saying even though Bitcoin's been moving more in recent history, the market is saying in the next week, if we're going to move, we're gonna see Ethereum move more potentially, and certainly to the downside. Right, that seems to be the general consensus in the options market. Now, the rest of the curve, like I said, is still trading Ethereum under, and the longer you go, the more that is the case. So 4 or 5 vols in the back end, still in favor of Bitcoin. The futures price action of the spread, the future price action, of the spread is likely to be determined by spot direction, because the spot vol correlation is divergent between Bitcoin and Ethereum if you look so far this year. This is something my friend Greg at Amberdata talks about. If you look at the data, BTC has a slight positive spot vol correlation, whereas Ethereum has a slight negative spot vol correlation. So that's saying if crypto markets go up, you would expect BTC to realize more and be more volatile. And if crypto markets go down, you would expect Ethereum to be more volatile, right? So that is what the evidence, what we've seen so far this year. If that continues to hold, then that's what's likely to transpire. Okay. My throat is a little bit sore. Sorry about that. And if we go to Skew, we had a call bid kick in, obviously, on that spike on Grayscale. Got that evaporated quick. BTC obviously found its way back to 26K very fast, and Skew flipped back towards a put premium, quite a deep put premium. So if you look at the weeklies, we're looking at 4 to 6 vols for puts over. If you stay in the back end, 6 months plus, March 24, June 24, we do still see a 2 vol call premium. So there's a big disparity between what people are thinking for Skew in next year versus Skew in this year, particularly in the first couple of months. Okay, very, very much fear of breakdown and paying a premium for the downside break right now, but thinking longer term, it's all about calls. Okay, that has not changed. Ethereum Skew quickly giving up any call bid as well. Put premium in the front end is actually in line with BTC. Typically, put premium in the front end of Ethereum has been trading above BTC, but now the vols are slightly higher in ETH. The skew is actually equal at around 6 vols in the front, so not much in it there. But if we go further out the curve, because we do still see Ethereum more neutral, so Ethereum doesn't have a call skew in the back like Bitcoin does. I think that is mainly to do with the supply of long-dated upside in Ethereum from these big overwriters. That keeps a bit of a lid on that call skew. It doesn't really let it go into call skew territory. And then also we've got obviously all the demand on the Bitcoin side pumping up those calls in, for example, for the halving, the ETF approval. If most institutional players think all that stuff's happening next year, then they're going to own those upside calls for 2024. So that's what they're doing. So you've got demand coming on the BTC calls versus supply on the ETH calls, which makes sense why that spread in skew should be the way that it is. Okay. And then last thing I'd say is skew moving sharply in response to spot moves, like it has done in the last week, shows just how speculative options flows still are, particularly in short-end maturities, right? When the skew can go from +5 to -5 in a matter of 2 days, it shows you the skew is so unstable. It is not being driven by structural flows. It is being driven by short-term speculation. Okay, and that's what people are using options markets to speculate on those crypto moves. Okay, all right. God, my voice is really not good. Okay, so looking at our dashboard, buy calls is back. Obviously, we were in buy puts when we popped. We're back in buy calls. Personally, I would wait a bit. I think price action is showing you it's getting more and more likely that we're going to get a downside break. So I wouldn't be in a rush to buy calls right now based on the strategy compass. If we look at the flows, increased volatility did bring an uptick in options volumes. So protection buying was the order of the week. We saw September 27 puts were bought outright. We saw risk reversals bought in the 2630 strikes. That was bearish risk reversals, pretty much near zero cost riskies. That was a great trade. Pretty much the opposite of the trade I did, where I stopped out of some risk reversals, but never mind. Vega got sold in December. So supply of Vega coming in the 28 straddles, and also on the upside in the 28 to 30K region on upside calls. And then some chunky calendars going up in OCNOV and OCDEC. People kind of buying back lower premium stuff and selling something a bit more juicy. So that's the sort of stuff we were seeing in Bitcoin flows. In terms of Ethereum flows, not quite as active, volumes drifting slightly. Biggest block trades were generally buyers of options, hence why you saw a bit of a bid to the front end. So to buy protection or to buy upside. The downside protection was generally focused on September expiry or shorter, so 29th of September, 15th of September, 8th of September, that sort of stuff. And then in terms of buying calls, there was some November 2100 calls bought and some December 1900 calls sold. So two-way action in the calls, but generally protection buying in the front end. That's what we see. In terms of gamma, how the dealers are set up, positioning generally drifting lower with spot. So BTC dealers became more, their gamma positions became more negative on the move down. That was a function of just the way things were and also new buying of protection. So you can see on this bar chart here, we've got these big red blocks represent 8th of September strikes, so this Friday. And so the dealers are short the 25 and the 2600. So the negative gamma there that is coming mainly from there, which basically means we have got potential to chop and potential to be a bit more volatile, especially if we break lower, right? So not only do we have a downside technical break, but we have a gamma set up to accelerate that if we break to the downside, which is why having some caution here does make sense. Ethereum dealer gamma dropping, but not to negative yet. So still positive, but is falling. Again, seeing some of that demand for puts come in, taking dealers short the local strikes for this Friday. But outside of that, we've got a lot of these blue bars, which are regular September longs from the dealers. So with the dealers still pretty well supplied in Ethereum vol. So we therefore think that might be vol suppressing in Ethereum. So even though historically this year so far on the downside break, Ethereum has been moving, the gamma setup suggests that Ethereum might not move as much. So the gamma setup doesn't always dictate what happens, but it is interesting to see there is more short gamma in Bitcoin than there is in Ethereum, which may play its part in a downside break where you might see Bitcoin actually drop more. So that's something you need to be aware of. Okay. That's the summary for this week in crypto. Thanks a lot. As always, I'll catch you guys later.